This is your real estate market update for November 2021. We're going to dig right into the statistics because I know that's what you came here for. So last month in the L-Star jurisdiction, 865 homes changed hands. That is down 7.1% compared to the same time a year ago, but it is the second highest number of sales since 1978 on our board. Now, number of sales doesn't really mean everything, because if we don't have any inventory, how can we possibly do a number of sales? In this video, I'm going to be digging into some macroeconomic factors we're seeing in the area. I'm going to be talking about the territories that we do cover, showing some statistics that cover a much wider breadth and overall macro trends. We also like to give you insights that we are seeing, boots on the ground, things that maybe you cannot find on MLS. My name is Justin Conoco, one of the owners of Prime Real Estate Brokerage. We are based out of London, Ontario. We cover all the way from Kitchener down to Sarnia, Lake Erie to Lake Huron. So that's like Grand Bend to Port Stanley, and think about everything in between. Why don't I just share my screen with you for a very quick second and show you that territory so you recognize it. If you are watching from the globe, which I know millions of people will be on our YouTube channel, or Ontario, which a lot of our viewers are actually calling us and relocating to this territory, here is the map. So there is Kitchener, Guelph, and the Greater Toronto area. I like to call this the Greater London area. A lot of these primary, secondary, and tertiary markets are really starting to explode. And London used to be a secondary or even maybe a tertiary market, but now London is the new Kitchener, St. Thomas is the new London, Port Stanley is the new St. Thomas, as you can tell by some of the trends that we're going to speak about. Let's go right back to the actual statistics. So I wanted to also share that months of inventory is something that you want to watch. So if you're in the buyer's market and you're wondering why it's so hard to buy a house, it's because we are at 0.6 months of inventory, meaning if we didn't list a single house on the market today, 0.6 of 1 month is all it would take for us to run out of homes. We've been trending around the 0.9 mark. For reference, a balanced market is around 4 months of inventory, and that is what a typical real estate agent would normally deal with, or seller, in terms of sometimes how long it takes to sell a home. Definitely not what we are in right now. Average price point for our territory, and again, we're talking about Kitchener to Sarnia, Lake Erie to Lake Huron area. Sarnia is a closed board. I'll talk about that in a couple minutes, but we're talking about an average price point of $672,328. The HPI benchmark stat, which is the price that reflects buying a typical home, so not just the average price of all sales, is only $613,900. So let me rip through a couple areas and give you some context. So HPI, which is buying a conventional home in any of these markets, Central Elgin, $641,300. If I go to the average price of a home that's sold, $823,556. So the news would really like to tell you that $823,556 is the average price for a home in Central Elgin. But if you normalize that number, you can actually afford to get a house in that area for about $641. Our entire board area, the HPI number is $613. The average is about $672. So that's more normalized. Middlesex Center, which is a lot of those farm and rural properties, HPI is $904,900, and the average price is about $1,043,000. So there's a bit of a disparity there. St. Thomas, which is a great area. I will talk about some big things happening in that area in a couple minutes. 522 is the HPI. 593, 517 is the actual average price point. Strathroy, a place to watch for sure. 717,400 is the HPI. Average price is 714. Little bit odd that those two are flipped. London East average price point is HPI 533,800 and 518,997 for the average price. So actually higher HPI than the average price point, meaning there's probably deals to be found there. London North 725,800 for the HPI, 778 for the average price point. London South 605,300 and 648,206 for the actual average price. So you are seeing a bit of a flex or swing depending on the areas that you're in. What I will tell you is we are seeing in these different territories a variety of different things happening. So just because you see average price points and homes are selling in multiples way over asking price, not every sale is created equally. A lot of our buyers are finding success either taking shots and writing offers on the right properties and not getting emotional about it, or even looking at overpriced stale inventory. We are noticing a longer days on market, and I'll go back to my screen share here so I can show you what I mean. This is InfoSparks, so I'm showing you behind the curtain. So if you want any specific statistics or areas, go in the comments. I will do the videos, and I'll actually just send it to you. I won't even post it on YouTube. Or if you want me to do a YouTube video on a specific market, let me know where you're from. and I'll tackle that or find somebody that will. We have an amazing real estate network that goes all over the globe. We are across Canada and the States. If you're looking for a referral partner in any network, I'm your guy. Just contact me and I will vet the person for you. I sit on the professional standards, MLS committee, and brokerage advisory, so I take my job very seriously. So let's talk all price ranges in ITSO, which is our entire board. So it covers all of the different territories, minus a couple boards that haven't signed up to the ITSO board, which would be Sarnia. Treb is a closed board as well too, but you'll notice these stats are very consistent, right? And if I'm looking at the last year, the average sale price, it's gone from 525 all the way up to 812 in October. So this is January 2021 till October this year. That's how much the average price has changed. The number of new listings to hit the marketplace in January is about 7,586. We're actually at 8,490. So we have more properties that have hit the market this month than we've had in January last year. Very interesting. Actual homes for sale, there was 11,441. Now there's only 6,212. So people saying at the grocery store, there's nothing for sale. They're right. The actual number of sales you were looking in January, 4,397. Keep in mind, winter. So maybe go to like July, summer, you're 11,000. April was super low, but keep in mind lockdowns and the Rona. And then go all the way till now, you're about 8,000. So a larger number of sales. The average days on market, super important number. It used to be 20. It's now 8 average days on market, which means if your price is proper and your marketing's on point, your house should be sold in 8 days. But guess what? A lot of people hold offers for 7 days. So very important to keep that in mind, that likely these houses sold in 1 day. They just were on the market for 7 months of supply. We're at 0.7. So it's up a little bit since they did the actual report. Percentage of original list price. So they're selling about 105% of list price. This is a stat I want to point out though. Let me take this off the screen. You got to look at my eyes when I say this one. When I'm telling you percentage of list price, not all sales are created equal. If you have a very unique home with a very small pool of buyers, sometimes pricing super low isn't going to net you multiple offers. A lot of agents and even sellers and buyers think, well, the market just sets the price. You're going to have 1 million buyers. Your job's easy. I promise you, if you can find the right buyers for the right properties and match them up, a buyer with an opportunity cost on a property will pay a higher price than the market may set if you're just expecting to sell in 7 days. And I can show you some case studies to prove that. You want to challenge me on it? Jump in the comments. I'll bring you on the stream, or we can just have a friendly banter. Maybe don't do that. I don't know what banters in the YouTube comments look like. Channel's not big enough yet, but if you stick around a long enough time, it will be. The price per square foot average is $456. So the average price per square foot of a home that's sold in all of ITSO territory, $456 for reference. Average cost to build. I mean, you're seeing build costs around the $450 a square foot plus land costs. It used to be about $316, and the actual dollar volume of sales is about $6 billion in October, and it was about $2 billion back in January. So, what does that all mean? I think what it means. Sorry, I wasn't sharing the last little bit, so hopefully you got some of those statistics. What it means is we're in the same market that we were in last month in terms of a shortage of inventory. It doesn't seem to be a lot of supply coming to marketplace, but deals can still be had, right? I would not get emotional in a marketplace like I'm seeing right now. I'm still seeing sellers find a lot of success if they have the right strategy. But I am noticing from a macroeconomic level, and this is where I want to give you the insights, the developers, the builders, the mortgage agents, the appraisers, the actual agents, the buyers and the sellers, having to step back for a second and really figure out what their longer term plans are, right? If you look at April till about August, it was just an absolute frenzy. You look at the government involvement in trying to push the housing market one way or the other, whether that's going to have a positive impact, yet to be seen. But I am seeing people really kind of level up the way that they're looking at the data and looking at the marketplace and making more concise buying decisions rather than getting emotional. So if you take anything away from this, is really put some thought into what the next, call it 5 to 10 years of your life may look like, and make sure you're working with your power team to assess the situation. That can be your real estate agent, that can be appraiser, it can be your mortgage broker. It depends on what your out is. Insights for our territory as well. If you've been hiding under a rock, maybe you didn't see the announcement that in Talbotville, Amazon is actually building a new facility. We've been doing a ton of work in Elgin County, new developments. We have some new projects we're working on. So we're out there all the time. And the Amazon building, it is massive. Shout out to the Broccolini family. We go back a long, long ways, and watching what they've been building blows my mind. And it's really going to have a significant impact to that southwest corridor. Why did they build it there? My thoughts are, if you look at the logistics, it makes a lot of sense. You have the two 400 series highways, you have the boats, you have the trains, and you look at the cost of living here, it's still very affordable compared to other markets. We've also been keeping tabs on the builder supply chain. Last year, around the same time, we were really talking about how the wood prices were starting to go up. We started to see resins, bathtubs, everything taking longer. Windows became an issue to get. And all of these factors were something we really kept a close eye on. And a lot of the development projects we had, some of them we even scaled back some of the phased in rollouts because we didn't want to just do a deal on a property and then have to increase pricing because the hard costs came up or whatever that looked like. A lot of those projects are set to relaunch over the next couple months. We are seeing a lot more confidence in the builders, in the trades, and people are starting to catch up from a project management perspective, which is very exciting. I also know staffing is a bit of an issue still across the board. If you have any kids, I would encourage you, get them into the trades. I think skilled manufacturing, skilled laborers is going to be a six-figure plus job down the road. There is not enough of them. There's not enough people getting into that industry. Too many people want to be YouTube celebrities and on TikTok, but I can tell you, if you can get really good at working with your hands, there's a massive demand for that out there and massive demand for employment as well. So we're also seeing a big trend of institutional developers coming down from the greater Toronto area and buying up land in places like Grand Bend, St. Thomas. Really, they're starting to look and canvas for land for the next 10, 15, 20 years. I have seen some very large builders and developers coming down as well. And it looks like they're planning for the next 50 years. So I'm just going to leave it there. We went over some of the stats. I want to know what you want to know. These market reports are for you, the people. Where are you coming from? What information matters to you? Is there a certain asset class you want us to cover? We can dig into investment, commercial, new development. We can do agriculture. We can do it all. Prime literally covers every single one of those aspects. And like I said, we're in a lot of different markets. So jump in the comments. Let us know where you're from. Thank you so much for joining us for another market update. We will definitely catch you on the next one. And I look forward to hearing from you.